Welcome to the Credit Union Business News Podcast, the only all-digital, all-business resource for credit unions. This episode is sponsored by Bator Training and Consulting. We create environments where employees actually want to come to work and members want to keep coming back. Hi, I'm Kbator, your host for the Credit Union Business News Podcast, and I have another perfect guest for our show. Let me tell you a little bit about her. Her name is Rebecca Stone, and she is the president and CEO at Service One Credit Union in Bowling Green, Kentucky. She is a passionate and committed leader to the purpose and mission of Service One Credit Union. She defines credit union vision and strategy, establishes direction and focus. Sounds like every great credit union CEO leader. Engages, leads, and develops credit union associates while managing the operations and activities of the organization. She's been doing that for nearly 5 years at Service One Credit Union after being the EVP and COO at that credit union. She came from the banking world, but we're not going to hold that against her. Rebecca, welcome to the show.
Well, thank you. I appreciate being here. Thanks for the invite. This sounds wonderful.
Well, I haven't asked a question yet, so we'll figure out how wonderful it is in about 5 minutes.
I was talking about my biography there you were giving.
That's kind of a running joke of some of the shows. I've been blessed to be a guest on some other podcasts, and they read my bio, and I says, that guy sounds pretty good. Maybe I'll get him on one of my shows.
One time I was working for, at the time, Nations Bank, and I don't know if you know much about Hugh McCall, but he's really an interesting character, and he was up there expounding on how wonderful Nations Bank was and how they make it and associates are happy and yada yada. And the guy next to me sort of elbowed me and said, "God, I wish I worked for that organization he's talking about."
That is a great lead. You are a natural for these shows because it's a great lead-in for our theme, which is creating a best place to work. And it's funny you say that because many, many years ago, I worked for a credit union that had one of those best place to work plaques on the wall to the HR department. But it was from 5 years previous, and it seemed like they were really, really leaning back on that plaque because I know just down the hall there was a virtual revolving door around the HR department. People were getting severances and being pushed out and quitting, and other people were being pushed in to try and deal with it. It's like, when did this happen, and can I go back in time to that organization?
Exactly. Luckily, I'm only 2.5 years into just the CEO slot. So, I hope that we don't ever get there where we're leaning back on the best place to work, that we continue to move forward. But yeah. You of all folks probably know how difficult that is, too, to keep a culture going in any organization, especially as all the changes that happen. Then your culture really needs to be agile. Because you're going to see an iterative culture, but you keep the baseline going so that you give our associates what it is that they need to want to be here.
Yeah, agreed. I find that especially in times like this where you have, quite possibly the most unusual year of 2020 in most people's lives. My parents and my in-laws also like to tell me that the 60s were pretty bad, but I only caught the end of that decade, and I don't remember too much about it. But yeah, this is an unusual year, and I find that organizations, especially credit unions that have built and cultivated is probably a better verb, a solid culture before this, they run with the bumps a little bit better. If you're trying to do culture building in a year like 2020, it's certainly not impossible, but makes it a little bit more of a challenge,
That it does.
Yeah, it's kind of.
I'm sort of glad that we started 2 years ago because it's helped through this COVID-19. We had, interestingly enough, we had just converted, done a core and digital conversion. We ended in the weekend of March 1st, February 29th. And so we were only a few days into that when COVID-19 raises its ugly head. And so we had to be agile and turn on a dime to be able to go from that conversion. If anybody's done one, they know how difficult that becomes. And then to, what are we going to do with COVID-19? Let's get out our business continuity program and see whether we can live this pandemic version. So that sort of was, our organization did a great job. So I have to give kudos to our associates.
Yeah, I've joked before, having gone through first a credit union merger as an executive, shortly followed by a core conversion. And I, I usually say, I think I'll take the pandemic before another merger and conversion combo. I think I could deal with this a little bit better. But, to your point, there have been some credit. In fact, one client of mine that literally had just finished a conversion at the end of 2019, beginning of 2020. And it was tough. It wasn't ridiculously difficult, but, there's challenges with any conversion. And they're so pleased today because there's so many more things that they can do online electronically that has helped them to continue to connect with their members during this time that they just wouldn't have had if this had happened a year ago.
Exactly. That's one of the reasons why we changed core. We expect to grow, but we have to have a core system that's looking not just at today, but what tomorrow looks like. And they have to be agile. You really need open source code so that changes can be made easily rather than just a prodding along legacy system that a lot of folks are still, a lot of credit unions in particular are still on. And if they want to survive, they got to sort of decide where they're going to go. Are they going to be absorbed someplace else, or do they want to bring their members everything that they possibly can get out there in the competition?
Yeah. Well, the best credit unions I've seen have adopted the right technology, but to not unintentionally switch the conversation back to culture. I find that when they have the strong culture already in one way, shape, or form, and nobody ever has a perfect culture. It's just a scale of bad to mediocre to good to great. That when they have something that's good to great, they are able to make that human connection even through that technology, if you will. And your credit union, I'm sure, has done that because you earned a Best Place to Work award on multiple occasions. And I'm always curious, what is the criteria that was used to enable you to earn that reward? I mean, did they take a bunch of employee surveys? Was it based on numbers? Was it based on turnover? A combination thereof? Do you have a sense for exactly what you did so well in terms of the criteria in order to earn those awards?
Well, I really believe that when I stepped into that CEO job, that we were looking, I got with our human resource director, and we were looking at the culture that existed. And what I sort of recalled coming through the ranks in the financial industry are the things that if I had a choice then, if I had a voice, what I wouldn't do. And some of those things we were doing. So immediately we had to figure out how to establish a new direction. And so when we talked about that, we talked about we want a positive atmosphere of work. We want the work to be challenging. We want it to be stimulating. And so how do we make that happen? That's really, the associates are the key to the success of the credit union. And my feeling was that if we keep the associates positive, that the positivity will naturally flow into our member. So we had an initiative, a strategic initiative the first year to engage our associates so they engage our members. And we tried to do that in a variety of ways besides just the environment. we did talk to our associates and ask associates where they thought we could improve as a management team. And so we then began to build an agile organization, where our associates could turn on a dime and had a sense of purpose every time that they came into work. And an agile organization typically means iterative. So while we have a culture and we took that view into what now our associates call the culture wheel, we do know that it is iterative and we have to find new and different ways to keep everyone positive. COVID-19 is, hit, and we all needed to figure out how we're going to be positive, how we're going to protect ourselves. The other thing that we did is we started talking about wanting to be a learning organization. And we felt that if folks don't have a career path or they can't see a career path and they don't have things they do to get there, then they're just come in and they're just working. And so we started creating career paths for every position in the organization. I'll use the teller because that's the member service rep, because that's what people see the most. And certainly that's where a revolving door happens more often than not.
Correct. And
so you can be an entry-level teller, and when you come in, you can see that you have a path to either go from there to what's called a senior, to a branch operations person, to a manager, or you can take a different path over into opening accounts in the lending operation. But it's very clear. And we have certifications along the way. And then if they want to supplement that with college, then we also pay for that too. So we continue to find different ways for tellers to be able to have a path, or one of your back office folks. So that's a couple of those things that we did. I think one of the important things, we wanted to promote and provide that balance between your professional life and your personal life. And we asked them, how could we best do that? And then we started acting on their suggestions. So I think that's really what the criteria we set for ourselves as we began to look at how do we make this place a really wonderful place to come in and want to be and want to serve our members. And we feel, the management team feels like we're service to our associates so that they can do that.
Yeah. So many great points, Rebecca. Now a word from our sponsor, Bator Training and Consulting. It's pretty clear that due to COVID-19, it's going to be a long time before any large in-person events will be available in the credit union industry. You may not even want to count on having the GAC or any other conferences in 2021. Sure, there are a number of quality online options to learn, but what about those conversations with your peers during the conference coffee breaks, during lunch, and at the end of the day over dinner? Some might say that was the most valuable aspect of attending an in-person event. That's why we created the Credit Union Business News Online Collaboration Group. The program is based upon the concept of open space technology, a technique I have used successfully within the Police Officers Credit Union Association for years. It's in essence a formalized coffee break conversation that has specific topics that are critical to the credit union industry today. Would you like to learn more about being a part of it? Then send an email directly to me, Ken Bator, at Kbator, B-A-T-O-R, at btcinc.net. I'll be happy to give you more information and invite you to be a guest during the next Credit Union Business News Online Collaboration Group. You know you want to be part of the conversation. I was thinking back in the 90s when I worked for a fairly large credit union in the Midwest, and the regulator had in essence forced a succession planning program or process on us. And I remember in the 90s, I think, this employee engagement idea was just getting birth. It was more about communication than engagement back then. And I remember thinking that this was so poignant in a staff meeting
that the head of HR came up to speak. You're always, at least in the 90s, you're always a little bit, kind of scared when the human resources person comes and speaks at a staff meeting. What's going on? And she explained the succession planning process and said that the CEO came to her and said, well, if we're going to do this, let's not just do this because we're forced. Let's use this as a training and development opportunity. And so we use that succession planning, not just simply to fill in the blanks so the NCUA could get off our back. We used it as a tool to say, all right, what are the career paths available to you? If somebody truly does see that you could be a couple of levels differently in the org chart, and you're amenable to that, you actually want that path, then great. Let's see what skills and attributes you have for the job now, and where you're not quite there yet today, and where we can send you, whether that's outside training or inside training, or we could throw a book at you or something. But I thought that was pretty progressive at the time in the 90s.
Well, now I think it's a necessity. A lot of Gallup polls have been done about associate engagement, and one of them that just startled me was that only 70% of your employees are not engaged at work. And so I think to myself, well, what does that cause? Well, I'm not sure that we get the best work out of those folks that aren't engaged. And so you really need to look at engagement. And again, maybe it is, back from the 90s, but you now have even a more diverse workforce. So engaging them so that you can understand how to meet each of those diverse segments' needs is challenging, but a necessity.
Yeah, I agree with you 100%, Rebecca. I even go one step further. I think that, I kind of alluded to it, that in the 90s and maybe early 2000s, we were in this communication mode in management, and that we're going to communicate everything to you. We're going to be transparent. We're going to give you all the financials. We're going to tell you exactly what's happening. You're probably not going to like it, and you're going to be ticked off, and it's going to mess up your job, and you'll have no say about it, but you're going to know exactly what's going on in the process as you're getting screwed. And then we went to this engagement of, let's ask for opinions, let's get them to where, we have surveys and we have focus groups, and they have, they can communicate to us, and we have that engagement, and maybe we'll have a picnic and a nap pod too that we toss in there. And I think now the best organizations have gone beyond engagement to true involvement. Where everybody is involved in the process of moving the credit union forward. Even if it is an MSR, if you will, to use an example, they're choosing, the charity that they want to spend time with on the credit union's dime. They're choosing the cause that makes sense and is aligned with the organization that we're going to help support. And that's involvement. And I think if we do that, even if we fall sometimes a little bit short of involvement, we're falling back on engagement, and we're not necessarily falling back on communication, where we're just telling and not including.
Yeah, I agree. Communications is really, if you were to take a survey over time, you would hear, well, communication is important. The associates want to be communicated with. Well, I really think that the associates are saying they want a voice.
Yeah.
And that's what became important. Even as we began to put together our conversion team, our associates were surprised because we had, all areas of the credit union part of that conversion team. It wasn't just management or the managers of folks. It was that teller that came up and got to look at the information and go through all of the conversation that got us there. And I think it was much more acceptable when we really had to flip the switch, because those folks had been involved. And, nothing's perfect. And those folks still have some work ahead of them, but at least they can look back and own this and say, be proud of it, because they're the ones that contributed making it happen.
Right.
And I truly believe that's the probably the best thing we can do for our associates is let them have a voice and then act on that.
Yeah. Yeah, there's a great quote that I use from time to time, which fits where you're going with that. And I'm not looking up at the sky, but my my little library is right above my desk, and I'm trying to get the right book and the right person so I don't mess this up. But yes, it's from a book called Leadership Matters by Lee J. Collins, Colan. Great little book. Almost as good as the one I wrote. But anyhow, he talks, he has a great quote in there on people support what they help create. And that's where I go when I talk about involvement, that even engagement isn't necessarily them creating. Involvement is them, as you alluded to. Okay, we're going through a conversion. What do you need to be able to do your job and be able to do that? I see the lights went off. Did you not pay your bill?
Yeah, I know. They're telling me to go home. I didn't know. That's what the board does to tell me we've had enough.
Yeah, the board's telling you, you're available for other employment, by the way. The contract just ended.
Exactly. How many days have you worked here, not counting tomorrow?
Yeah, so. Exactly. Never heard that one before. I'm gonna use that one. Yeah, I always love those automatic shut off lights, especially when I'm washing my hands in an office bathroom. What just happened? Anyhow, be that as it may. See, I told you we were gonna have fun on this show, one way, shape, or form.
I'm all about that.
So kind of even sticking with the fun theme. How does creating and maintaining a positive workforce and workplace, for that matter, really transfer to the bottom line? Because I've been in this industry for almost 30 years now, and we hear some ignorant, not stupid, just some ignorant leaders talk about, well, what's this culture building stuff, what's this training going to do to our bottom line, which it always to me transfers to the bottom line. How is the culture transferred to the bottom line at Service One?
Well, to sort of follow up on what you said, and I'm going to use the word engagement again, but it's much broader than engagement.
Sure.
What some Gallup polls have found is that companies lose $450 to $500 billion a year on associates that aren't engaged.
Yeah.
And when I say that, I mean have a voice in the place that they work. And so the interesting thing about that is 69% said they'd work harder if they were better appreciated. So if you take a look at those kinds of things, then we've done a variety of things that we think help our bottom line. And so, just to summarize some of it, we believe and have seen that it's lowered our absenteeism. And people are here and they're working and nobody has to cover for it. It definitely, when I first came on board, we had a very high turnover rate. As you know, that you can prove the cost of that.
Yep.
Bringing someone on board, training them, then them leaving 60, 90 days out when you didn't want them to leave. That gets very costly, and we've seen that because we barely have any turnover rate right now, unless we have a college student, they're going on to other things. It also requires, to use another really used up word, empower your folks, then you really don't need a lot of management and supervision hanging over them and sitting on their shoulder. That also saves you some money. And I think any time that you can invest in improving the morale and your environment that you work in, that you will see that returned, several fold. So that's sort of how I've looked at the contribution that all of our associates made as they embraced the organization we're trying to move to.
Yeah, all very direct contributors to the bottom line. I can harp on all of them, but the one that I will harp on is absenteeism. Because if you really dig into a cost accounting of how much absenteeism costs in hard dollars of productivity, it's tremendous. It's a huge drain on the gross revenue of any organization. And I often joke, our tagline at Bator Training and Consulting, or at least the first part of it, is creating an environment where employees actually want to come to work. And I always joke with new clients, I said, if they don't want to come to work now, let's at least get it quickly where they're apathetic about it, where they, I'm going to work or not. At least that, we can work with that. I just don't want Sunday night, half of your employees getting sick to their stomach, knowing that they're going to have to make the long, hard drive into your place of employment. That's never going to work.
Well, and you do, I think I worry about it if our associates got up in the morning and stubbed their toe and used that, as a reason not to come in. Oh, I'm sorry, I stubbed my toe and it's not broke, but I don't feel like coming in. I mean, that's what they're really saying.
Yeah, exactly.
I don't have a good reason to come in and do my job. Okay.
Yeah. I've seen people with dislocated shoulders from a Sunday football game come into work because they wanted to, and people with a hangnail that say, that's too much for me to overcome. But and even now, I could always tell a decent culture out here in Los Angeles. As in many places, the restaurants have gotten hit really hard with this pandemic. And I've had the pleasure to work with some restaurants, and I know how hard a business that can be. And here in California, we have a kind of a unusual, I will say personally, my opinion, ridiculous situation where people are getting paid more through unemployment than they were when they were working. But what I'm seeing on the positive end, which is bringing back, some feelings of, people generally are good, is some of these restaurant owners are getting interviewed in saying, almost all of my people came back, even though they had to take a pay cut in order to come back to work here. Because they had to go off of this unemployment. And I thought to myself, okay, that's a good culture, for an individual to say, even though in a short amount, in this intermediate short-term period, I can make more by sitting on my ass at home than, than busting my ass at a restaurant because it's hard work. I'm going to go into that restaurant because I believe in that owner. I believe in that small business, and I want to be there because nobody is going to go back in that type of situation unless they truly want to be
there. That's true. Absolutely. And so I feel like I do feel that, the major portion of our associates want to be here. They don't feel like they're hogtied and chained to a chair to work in this organization. Sometimes what gets to me is that I want to strive for 100% of our associates wanting to be at work. And somehow that really doesn't translate. The things that we were doing doesn't translate into 100% of associates wanting to come into work. So, but I think we've got a good group of folks that mostly think that way. I never like to fool myself believing that we're the end all and say all to an organization trying to grow a culture where people want to work, a diverse group of people at that.
Yeah, I think if you can, continually float around that 90%, you're doing a pretty damn good job. You're always going to have probably that one or two problem children. And even if you were at 100%, I would probably tell you that that's fleeting. So don't get used to it. But, speaking of that, we talked about the fact that, I truly believe from what I've learned from you that the vast majority of your employees actually do want to be there, which is great. And I think that that part of it is not only do employees want to be involved, but they want to be with a winner. If an organization is struggling, year after year, sometimes we go through some rough patches, but if it's struggling year after year, even in the best of management and the best of intentions, they're like, oh, I want to be with a winner, not somebody that's struggling. And so you've proven through being branded as a best place to work, as a winner on some level. Do you have an idea of what that means to employees to be with a stable and progressive organization?
Well, I think that that they're proud of Service One. We have some very tenured folks, and it's like their life, is Service One Credit Union. I think they're proud to engage with the members and talk to the members about everything that's happening in the credit union and how we serve their needs. I'm going to go back to one thing that I think that they really love. They love having a voice.
Yeah.
And I think that means a lot to them, just as much as being proud of the job that they're doing and us as the best place to work. But we also got best place to get a loan, a mortgage loan or a consumer loan, and a couple other best of. So, I'm always pleased with that. But this idea of having a voice, I think, means something to folks. We had some, when we were going through, what is it that you need? A group of associates came and said, hey, we want to go out into the community and we want to serve them. Can we have a little group here? So they got themselves together, and what we agreed to do is support them, even though they raise funds other ways, and called themselves the Caring Squad, the Sharing and Caring Squad. And they've done several things out in the community, like for no reason giving somebody a card, $5 card to go to Starbucks or wherever it happens to be. And, I'm proud of that. So I think that these folks wouldn't probably be doing that if it wasn't for, I'm from Service One and we just want you to have a happy day. Here you go. So I think that voice, and I will say that in general, that another statistic, and I'll pull out of my head, feel like there's like 4.6 times more likely, an associate's more likely to feel empowered to form their best work, if they have a voice. And so I think that's a big number, and that giving them a voice is not the end all and say all, especially when they want to spend $50,000 and you don't have it to get a new platform. But overall, they know that management will listen to them.
Yeah, that usually most credit unions, unless maybe you're Navy or Schools First or Golden One, don't have $50,000 just laying around. But $50,000, could be in some states, could be a personal banker. But in California, that would probably be a part-time greeter.
Thank goodness that's California.
Yeah, and that wouldn't be cost of living out here. I think that even with the 50,000, I think that if people are truly involved and empowered, and it's for the right reasons, they find a way to find that $50,000, whether it's in the budget or through outside funding or so forth, kind of like you alluded to in your sharing and caring group, if I got that right.
That's right. Yeah.
Yep. No.
And at any rate, I think that I guess I'm certainly proud to work here. So I sort of feel like the majority of our associates are too.
Yeah, I could tell you're proud, and I'm sure most of your associates are as well. Rebecca, I could literally talk to you for the rest of the morning on this subject because it's one that's near and dear to my heart. But I know that you have this thing called a credit union to run. So, so with that, I'm just going to thank you for not just a great show, but just a really insightful and enjoyable conversation this morning.
Well, I enjoyed it also, and it really was my pleasure to talk with you. You know, I hope we get a chance again sometime. That this has been a great conversation.
Thank you. Thank you. I enjoyed it as well. And thank you to all of you that have either watched or listened to this episode of the Credit Union Business News Podcast. And we will be back with you again in about 2 weeks with another perfect guest for our show. Take care.
Learn more about Credit Union Business News at creditunionbusiness.com. Suggestions for the Credit Union Business News podcast can be directed to Tim O'Hara at tim@cubusiness.com or Ken Bator at Kbator, Bator, at btcinc.net. To learn more about this episode's sponsor, please go to btcinc.net.